Hi guys, thanks for tuning in to another episode of Nuggets News. Today we welcome a special guest, and that's Simon, the CEO and founder of Bank to the Future. How are you, Simon?
Hey, great. Thanks for having me.
Now, I'm really interested. We can dive into some trading, some investing. You used to work at an investment bank. You're an angel investor. You've been through plenty of Bitcoin cycles. So we're going to talk about all sorts of things today. But for people that haven't followed your work, what's your background?
Sure, yeah. I left investment banking in 2006. Prior to that, I studied economics and I did a lot of talks on the history of money, gave a lot of talks about impending crisis, mainly from the perspective of fractional reserve banking and the problems with banking and things that people just weren't interested in talking about until after the crisis. And because I was giving a lot of talks about that, I was presenting at Occupy London event one time, and one of the very early Bitcoin developers approached me, and I got introduced to the Bitcoin project really early on. And a gentleman called Amir Taki was running the first ever Bitcoin conference in Europe, which was in Prague in 2011, and I got invited to speak at that. From there was about 40 odd people in the room in Prague, in what can only be described as a crack den, half anarchists, half computer science geeks.
Yeah.
And I kind of got addicted to the project ever since. And as I'm just going to get rid of that sound. I'll carry on. As Bitcoin grew, so we've been through all the different cycles from when it was only Bitcoin to everything in between. And also at the same time, in 2010, I co-founded a platform called BnkToTheFuture.com, and we were working on the regulations of allowing investors to invest in private equity online. A lot of that work later came to be equity crowdfunding, and then in America they had the Jobs Act. Really that's been started that in 2010. We're now up to 2019, so it's been 9 years of developing to the point where we're hitting where I think this is all going, which is the securities token market. So been involved really in fintech, economics, banking, finance, Bitcoin, and the emergence of blockchain, and also the online investing, equity crowdfunding, what later became ICOs and now STOs.
So we did a video in 2017 talking about fractionalizing the ownership of things, and people thought we're crazy, but you were 9 years early, so there you go. To start off with, let's dive into that, the background of money. And since the GFC, there's been money printing and kicking the can down the road and all that credit that's been injected, and now we're trying to unwind all this for the first time in history. And where do you think world markets are at as they currently sit?
All right. Well, when I first gave those presentations many years ago, my presentation hasn't actually changed. And the reason for that is because while oversimplification is, the financial system is so tricky and there's so many dimensions to it in global finance, the one person can specialize that in the rest of their life and still not understand every angle of it. But I've tried to simplify the message over the years, and my message hasn't really changed. And that is, while there are these three challenges in our financial system, we will have another financial crisis, and each one will get worse. Because all we're doing is patching up the old system without fixing the root causes of the problems. So in my very early presentations, and I still give to this day, and what really excited me about Bitcoin was that there's three problems in banking that have never been solved, and don't seem to have any appetite to solve, and so things will get progressively worse. The first is, when you deposit your money at a bank, the bank becomes the legal owner of your money. And while they become the legal owner of your money, they can do with it as they wish. And that is the second problem, which is because you hand over ownership of your money when you deposit it to the bank, they get to spend it as they choose. And because banks get to spend it as they choose through where they issue loans, banks have a control over the economy that governments don't have. That is the second force. And the third force is really where it goes really deep into the rabbit hole, but keeping it really simple, is that our monetary system encourages debt rather than savings. Yeah. And so because in order to have an economy and in order to have money, we have to take on debt, There is innovation both at the government level and the banking level and the investment banking level in order to get more people, corporations, and governments deeper and deeper into debt so that you can increase the money supply. And but at some point, that debt either has to be repaid or it has to be recycled into a new debt, whether you call that quantitative easing or central bank debt or whatever you want to call it. So in its simplest form, we have these three challenges. Banks own your money, banks spend your money, and banks are the creators of money, and it's created as debt, and therefore it encourages debt rather than savings.
This is particularly relevant. Over half of our audience is Australian, and they've just passed all those new bail-in laws in Australia, which are already in place in Europe and the US. Do you believe that lowering interest rates has encouraged, like we've never seen before, money to go into assets and speculation rather than go into entrepreneurs and innovation? And in Australia, we see all this money going into housing, for example, and it's just gone into the wrong things, and we're about to see the repercussions of all that.
Yeah, I mean, again, we could go into, I studied economics for 4 years up to master's level, and I could go really deep into interest rates and the effects that they have on the economy. But again, trying to simplify the message for everybody, you got to just look at what it is. Well, why do interest rates dictate the economy? Well, the reason it dictates the economy is because our money supply is based upon debt. And therefore, what do we do in order to control that debt? Well, we control the cost of borrowing. Yeah. And so because the government has outsourced the money supply creation to the private banking sector through debt, the government tries to exercise, or the central bank tries to exercise control over the economy by essentially, when they need to stimulate the economy, they put interest rates down, and therefore banks, governments, and individuals all borrow more money, which stimulates the economy. Yeah. But then this bogey called inflation comes along, and they try to cool it down a bit. And when they try and cool it down, essentially they hike interest rates up, which is sending the original people that borrowed the money bankrupt. Yeah. And so we have this thing called a business cycle where we're encouraging people to take on debt, and then we're sending them bankrupt, boom, bust, boom, bust, boom, bust. Now, because banks actually own everybody's money because you deposit it with them, they have a choice of where to stimulate that debt. And where they stimulate that debt is they go for the lowest risk, highest return investment possible. And the lowest risk, highest return investment possible for a bank is always lending for mortgages. Yeah. The reason it's lending for mortgages is because if somebody defaults on that debt, then you can repossess the property and the property can't run away. So whereas with a business, you've got high risk, the business can disappear very easily. And so therefore, over 40% of the entire money supply is used in order to stimulate the property markets. And this is simply because we need money in order to, and the only way to create money in our current system is to create debt. And the easiest and safest way of creating debt is to stimulate the property markets rather than the job-creating entrepreneurial markets. And this is really what's flowing money around our economy in its simplest terms.
So you've just described those three issues with the debt-based monetary system and banks. So what were the light bulb moments for you, or do they still apply for Bitcoin now and its future that excite you?
Yeah, so what fascinated me about Bitcoin is I saw a bunch of anarchists and with the right mission that were trying to do the right thing, and a bunch of computer scientists that had no touch on reality but were incredibly intelligent at what they did. And I came in and gave a presentation as a finance person that was not a technology guy and not necessarily an anarchist. And so as a finance guy, I saw Bitcoin as giving people the ability to own their own money, giving the people to spend their own money peer-to-peer, and a fixed money supply system that was designed to reward the saver rather than the person taking on debt. Yeah. So if you borrow money in Bitcoin, because there's a fixed money supply, if Bitcoin gets more and more useful, then because of the supply can't increase, the only thing that can happen is the price can increase over the long term. Yeah. And so if you're borrowing in the Bitcoin economy, you can get eaten alive. Whereas if you save in the Bitcoin economy over the long term, it has really rewarded those savers. You know, looking at the entire history of Bitcoin. Obviously, if you get on the wrong side of a bear market like we're in at the moment, then it's not quite a store of value. It's still speculative. And so therefore it's not achieved that, you know, at this moment. But I saw in Bitcoin a world's best shot at creating an independent, sound monetary system that was independent of any political bias and any unnecessary influence of one country over the other. And that really, really intrigued me. And I've been hooked ever since.
So would you agree that as we grow to disrupt and the market cap continues to grow in size, that the volatility is going to become less? And then, because a lot of people would say to you, oh, it's not a good store of value, anything that can drop 90%. Or would you say to them, oh, it all depends on your time frame and those people that got in early have been rewarded? Or where do you think Bitcoin currently stands right now?
So I call Bitcoin a speculative store of value, which means that there's the potential to have a store of value and will give ultra high returns for those that speculate right. And by that, I mean, gold is a store of value. It is volatile compared to the dollar and other currencies, but nowhere near as volatile as Bitcoin. And Bitcoin has much, much better properties than gold, provided that it becomes more and more useful to more and more people. Now, the speculative part of that is, will Bitcoin become more and more useful to more and more people? My belief is that because of a couple of trends, Bitcoin will become more and more useful to more and more people. So I speculate on Bitcoin becoming an amazing store of value that has incredibly positive effects on the global economy and individual freedom. And so that is my speculation, and that is where, you know, and I've personally seen my my $30 Bitcoin crash to $3, my $1,250 Bitcoin crash to $250, and my 20,000 Bitcoin crash to 3,500 Bitcoins, or wherever the bottom is going to be in the current market. And that is the speculative element of it. My forecast is that because of anti-money laundering laws, because of systemic risk in the financial system, and because of the government's war on cash, I believe Bitcoin will become more and more useful to more and more people.
And where do you believe that biggest use case is going to come from? Like, a lot of people are talking about this ETF to drive in Wall Street investors, but we've been talking about developing countries where it's going to be needed the most, and they can skip that entire infrastructure of banking. Or do you subscribe to this model where anything that's a store of value will start to see inflows from Bitcoin as people see it as a safe haven from all other assets in possible, inflation or deflationary scenarios?
Yeah, so again, we've got different stages of Bitcoin, and at the moment, I think we're at the speculative store of value stage. Can Bitcoin become a unit of account where people price things in Bitcoin? I don't think for a long time people are going to think in terms of my milk costs 0.00123678 Bitcoin. People are still going to think in terms of fiat for an awful long time. And so because people are going to still be thinking in fiat, they can't they can't plan their life around something that could be worth less. So if you need to pay your rent, then you were earning Bitcoin, then you would need to sell your Bitcoin each month in order to pay your rent, because it's not quite a unit of account yet. And therefore it's got its challenges in trying to be a medium of exchange. So you're going through these different, cycles of Bitcoin. Where do I think it goes? Well, I think the ultimate user case of Bitcoin is exactly what it does now, giving people the ability to own their own money, spend their own money, and reward the saver rather than taking on debt, and having a fixed money supply that you can rely upon and it won't be changed. I think that is the user case. I think people in India, when their cash gets made illegal, will want to buy Bitcoin. I believe that people in Cyprus, when they bailed in, they will want to buy Bitcoin. I believe that when Donald Trump becomes president and the Mexicans are having volatility in their currency, they will want to buy Bitcoin. I believe that when the Brits Brexit and their currency loses 30% of its value, they will want to buy Bitcoin. And they will want to have it independent of politics, whereby they can bet against the financial system. They can own it, they can store it, it's unconfiscatable, it's unseizable, and it's unprintable. And those are what I think Bitcoin's user case use case is. Will it eventually become a medium of exchange and a unit of account? Well, that is the day when Bitcoin will become stable. And so if you want Bitcoin as an investment, then you don't want it to become a medium of exchange and unit of account at this point, because great currency is very stable. It doesn't change price. You can reliably pay your rent and know that you have earned the same amount each month in order to pay your rent or mortgage. And so really we are at that stage where there is a great investment opportunity in my mind, which is ultra speculative, but can Bitcoin achieve the impossible? And that was what I bet on in 2011, and I'm still betting on today, because I believe that Bitcoin is our best shot the world has ever seen of achieving a sound money. Will fiat be in the equation? Absolutely. Will stable coins replace fiat? Absolutely. Will governments create their own stable coins? Absolutely. Every central bank, every government in the world, every bank, every financial institution, every fintech startup and company is going to be using this technology in order to bridge that gap. And they're all going to have different use cases and different utilities. But Bitcoin could be this independent thing that no government can manipulate or control, other than the short-term price by pumping liquidity in and out. But our world's best shot at achieving sound money.
I think that's a great place to just talk about other altcoins. Do you see this store of value medium of exchange currency being the only use case, or are there any other altcoins or industries that you see being disrupted by blockchain?
Absolutely. I see every single financial product being shifted and changed for the better or for the worse via a blockchain. So Ripple is working on the user case of allowing banks to, interchange fiat money between each other using a cryptocurrency. Whether that will ever happen, or whether that not, or whether they'll disrupt SWIFT or not, that is essentially the user case. And again, this goes back to my beliefs about money. It's allowing banks to commit fraud and crime cheaper. And I think that there will be a user case of allowing banks to commit fraud and crime cheaper. What Ethereum is doing is got nothing to do with sound money. In fact, it's the worst possibility of achieving sound money, an unlimited supply. And you don't want it to be capped in supply, because if it is for its user case, which is smart contracts, and then smart contracts became creating financial assets, then you don't ever want that to be expensive. You want ETH to be cheap so that you can transfer value faster, cheaper. And then you've got things like EOS and other things which are saying, well, actually, if we're going to allow people to create these assets, we might as well create a faster, cheaper one. How do you do that? Well, you centralize it more. And the more and more you centralize, then the more and faster and cheaper it gets. And so blockchain is expensive, clunky technology for achieving decentralization. But if you centralize it more, then you allow people to do things faster and cheaper. So each one of those, I believe, has a use case. Ethereum is disrupting the capital markets. EOS and all the others that are trying to disrupt Ethereum are centralizing more, which will allow for more regulatory capture. Yeah. But they might achieve much more, they'll do things a lot faster and cheaper. And then you've got Bitcoin, which I believe is the only one out there that has any chance of ever being sound money, because of its nature of not having a promoter, not having an advertiser, not needing a press release, not knowing who its creator was, being created at a time when nobody cares, and having proven that while there might be pockets of centralization in Bitcoin, like the mining or development, but they all work against each other. And no matter how many times the developers try to get their way, or the miners try to get their way, or the businesses collude and try to get their way, it is in effect the most decentralized network we have out there, and therefore the world's best shot at sound money. And comparing Ethereum to Bitcoin to Ripple is just a fool's person game, unless you're coming from the perspective of you're an investor and you're trying to see what will have the most returns, in which case you're analyzing would a global reserve cryptocurrency stroke store of value be worth more than the capital markets or an interbank platform for banks? And those are the ways that people should be thinking, as opposed to saying, Bitcoin's better than Ethereum for as a currency. It's just a silly conversation.
Particularly when they've all got a high degree of correlation, as you say, for doing completely separate things. The next thing I want to talk about is the STO world. So you wrote Bank to the Future, and you've now built that website and that company. But I remember back in the day, Reggie Middleton and promised with Veritasium would be trading Apple shares for Google shares, peer-to-peer, and he never fulfilled that promise. So where do you think the STO world is at, and do you think those peer-to-peer capital markets is still something that most excites you?
So it's been a long journey. As I said, I embarked upon this journey in 2010, and at the time we were at Bank to the Future, were lobbying. I don't live in the UK anymore, but at the time I lived in the UK, and it was a UK company, and we were lobbying the regulator that was called the FSA at the time. It's now called the FCA. And they were the first regulator in the world that allowed for what became equity crowdfunding, which was allowing people to invest in venture capital online. The challenge is that at the same time, BnkToTheFuture.com was a fintech niche platform. We were looking to support the growth of and the disruption of the traditional financial industry through technology companies. And the only regulation we could achieve was to work with UK businesses and only allow UK investors to invest. And so after 4 years of messing around with that, we realized that, well, at the time there was no real Bitcoin businesses in the UK. And there was no real Bitcoin investors in the UK other than a few. So there was really no market. So we had to kind of go through our process. Then America caught along and created the Jobs Act and updated their securities laws to allow for retail investors to invest online under certain circumstances. And that took like 3 years longer than it was meant to take. So I personally moved to Hong Kong at the time. We relocated the business, we re-registered and re-regulated the business. And we opened up a global marketplace that allowed people to invest in equity for financial technology companies. Now, some of those companies on our platform were the likes of Kraken, Bitstamp, Bitfinex, the Shapeshift, who else? I'm drawing a blank right now, but some of the largest companies that we know today, we were fortunate enough to be investing in the seed round and syndicating them through Bank to the Future. And many of the companies that later went on to do ICOs. So then this whole ICO craze came along, and that was essentially that people realized. And so one of the first one we invested in was Mastercoin, which was allowing people to create tokens on Bitcoin. Then there were things like MadeSafe and Storage and some of the very early ones that we were investing in as well. And then the ultimate one came along, which was Ethereum. And Ethereum essentially wanted to create a smart contract platform, but what I think they did create is an ICO platform in the end. And ICO is a funny word because it's got regulatory meaning and stuff like that, but we mean creating assets on the blockchain that people buy. Yeah. And they almost went bankrupt trying to launch Ethereum, but they got it out in the end because Bitcoin price turned around during the last bear market, that was. And then a couple of years later, you had 2017, you had this ICO craze where there was a standard created for creating such tokens, and massive disruption in the venture capital market emerged. Now the challenge was everybody that was issuing these ICOs, or most people that were issuing these ICOs and investing in these tokens, came from the perspective of technology, with no background in finance, and therefore they thought that they were just selling software without any looking at securities laws in any way. Bank to the Future at that point almost got disrupted in the ICO market. I mean, we were syndicating deals like some of the largest token sales, but we were doing it in compliance with securities laws, which meant we had to follow securities laws. We had to write investment contracts. There were certain disclaimers. There were certain things that you need to do in order to comply, and then obviously money laundering and all the government agendas you have to comply with as well. And so, look at it in 2018, and then when people started to lose a bit of money in ICOs, I mean, no one cares when people are making money, but when people started to lose money, you start to get people that run away to regulators and say, please protect me, get me my money back, and therefore regulators crack down, and therefore they start enforcing their securities laws. And so now we're at a stage right now where a lot of these ICOs weren't launched in compliance with securities laws, and I believe that there is a way of doing an ICO in compliance with securities laws. We did it, the party kind of over for the people that were making those ultra high returns through ICOs. It was an extremely interesting year. The entire financial market we got the attention of the entire world. Every investment bank, everyone in the world was looking at this market, and they realized, it's when you combine these two things, which is the securities laws changes that occurred over time to allow more people to invest online and update the technology, combined with a global force that Bitcoin and blockchain were attracting. And when you combine these, old finance worlds with these new people that came in for the love of the technology, with all the speculation and liquidity, we might get another run through the securities token market. And one thing I've observed, through this, it will be different. And I still believe there is an ICO market, by the way. You just got to comply with securities laws. And I think an STO is a different thing as well. It just means that, there is a network effect of a token, and there is, putting equity and things that people are investing in onto a blockchain. There's a lot still to be done. There is another, I think, if you look back at the trend, so, I've been through about 6 different waves in my time here. First, you had Bitcoin, which was, creating a currency, as it were. Then you had equity in companies. So we were investing at low valuations in the early days through Bank to the Future. And then you started to get the first unicorns for companies like Bitfinex and Coinbase and many of the other billion-dollar-plus companies that we were allowing on our platform. Then you had Ethereum. Then you had altcoins, which was people trying to create their version of Bitcoin, which we still see today, which is I can do it faster, cheaper, better than Bitcoin, and they never do. They might get faster, cheaper, better, but they have, trying to compete with Facebook, and you have a social network that's no one using and no one wants to use. Yeah. Then you had Ethereum, which was the ultra high return after Bitcoin. Then you had the ICO wave. Now at BnkToTheFuture.com, we've just launched our secondary market for equity, so people can buy and sell the equity of the largest companies in crypto. And then we're also investing in the disruption. So we did equity funding rounds for like Securitize and companies like that. Yeah. So that we can make sure that we're seeing where the STO market goes. I think the STO market will be very different from the ICO market. Yeah. I think when Bitcoin turns around, we're going to have a really interesting time with ICOs, because there's going to be 1,000 odd tokens that disappear off the planet. And then there's going to be like 100 odd tokens that are actually doing something that were here, that were serious, and no more that will be created because everyone will be doing STOs. So there might be a scarcity in the really good projects. So I'm looking forward to seeing what happens. And it's all driven by Bitcoin though. Everyone's waiting for Bitcoin to turn around. And then you'll have this scarcity in the high quality, tokens that were created during the ICO craze. And then we'll see what we can do with the STO. And I think the whole market, as it moves to $1 trillion and beyond, you'll get ultra high valuations in equity as well. So I'm always diversified across these different markets, and understanding the different value propositions of different things.
Yeah, I tend to agree. I think the model is going to swing too far to this STO, and then it's going to be a little bit underwhelming, and it's going to happen behind closed doors a little bit more. We're not going to have this euphoria and hype in the public about it, and then we might get that swing back in 2 or 3 years where people realize, hey, there's still certain things that you can do an ICO for if it does have that true utility. So you think the next cycle may come from STOs themselves, all those projects launching STOs, but again, it all depends on Bitcoin.
Yeah, I'm not sure if the ultra high returns, you know, are there in the STO market. I personally, at the moment, the jury's out with STOs. But then again, I never predicted the ICO market. I mean, I did a TEDx talk in about 2014 where I went through how people are going to go public on the blockchain. It's still on YouTube. And ICOs, you know, we were looking at that in about 2014. But I didn't think the ICO market would get as big as it did. It really surprised me because in the back of my mind, I'd been studying, you know, we've been working on securities laws for so long. And we were like, there's no way that, you know, if ICOs continue as they are, then regulators are not going to care about money laundering in the future, which I know they really, or governments, which I know they really care about. Regulators aren't going to compare, you know, you can take, and again, I'm not giving a political bias about whether regulators and governments have your right intentions. You can take either theory that you like. Either they're trying to, you know, you can take the conspiracy theory route where they're trying to capture the market, control data, whatever you like. But or you can take the route that they are out for investor protections and all that type of stuff. Whichever route you want to take, they will care because it's either for tax reasons, for regulatory capture, or for, you know, consumer protections. Whichever political bias you want to take, they will care. And at the same rate that we were going at 2017, eventually Apple would have delisted from the stock exchange, launched a token, or if not, somebody would have done an ICO and the returns would have been so high because of all this new liquidity that was coming in outside of regulations that they would have ended up buying up all the stock markets. And that's where it was going. We were going from tokens to mergers and acquisitions. You know, and you've seen that with things like Tron coming along and acquiring BitTorrent and things like that. Yeah. Because if that market continued, essentially the whole market was going to, you know, go outside of government's control, and that's just not something governments are going to let happen. Yeah.
So, final thoughts. Anyone that thinks that Bitcoin's dead and this was all a bubble and that's the end of the cycle, where do you think that's heading from now on?
Oh, I mean, you know, in my mind, again, this is speculative. I'm used to this. What we're seeing right now, I think, is what I've seen 3 times over, which is a massive correction based upon new, you know, more and more adoption and more people coming in and entering this market. Then a massive shakeout to get rid of all the scammers, all the problems, get rid of all the podcasters that were telling people to, you know, buy, and all that crap that comes from these markets, and get back to people that are building stuff, improving the technology. You know, look for the podcasters that are actually here in the bear market rather than the ones that are only there in the bull market. Yeah. And I think during these bear markets, it's, you know, you look at all of the companies, we've invested in over 100 different companies. We've got equity in 100 different companies in the industry. During that 2017, none of them could achieve good customer service because they were onboarding the entire world into trying to teach them how to use this new technology. Yeah. And they couldn't keep up with money laundering, you know, regulations and all the stuff that needs to happen. You know, in 2017, you know, you couldn't get customer service reply within 3 or 4 weeks because the industry caught us off guard. It grew too quickly. And, you know, the whole world was being onboarded into this crypto market. We went from a few people having heard about Bitcoin to literally every single person I ever spoke to, no matter where I went in the weirdest corner of the world, at least having heard of Bitcoin, even if they still thought it was a Ponzi scheme, a currency for drug dealers and that. So my final answer is, as long as a lot of people in the world still think that Bitcoin is a Ponzi scheme, just a currency for drug dealers or a scam, then there is still an opportunity to be in the speculative store of value stage. Once the entire world knows that Bitcoin isn't a Ponzi scheme, isn't a scam, and isn't a currency just for drug dealers, short of becoming a medium of exchange and a unit of account at that stage. But at that point, it's no longer a speculative store of value. I believe it will be a store of value, which is stable money at that stage. So it will no longer have the investment capital. It will just have the preservation capital, like gold at the moment. My speculation, I don't know, I believe it will get there. And I think it's the world's best opportunity that we've seen, and the most exciting time to be alive in financial history. The money that our investors made was not from, they made money in the bull market, but it's because they were investing in the bear.
Yeah. And
the people that made ultra high returns from doing that. Yeah.
Yeah. And I think that next cycle for me is, as you say, when all those people that were talking about Bitcoin realize that this is a real thing. This isn't just a bubble and a phase. And that's what excites me most.
Absolutely, yeah, and you've got to remember that, you know, the day that Bitcoin, because I remember when we were first there, I was really unsure whether Bitcoin would succeed. It was a great thing. It was a great theory. I really believed in the vision, the mission. I spent my life trying to evangelize for it, but it was really, really uncertain whether it would succeed. I think the day I knew in my mind, for me, myself, that it was going to succeed, was when the banks started trying to defensively take out Bitcoin by creating the blockchain industry. Yeah. And they tried to take out the word Bitcoin and defensively use the word blockchain. And they ended up scamming themselves, because at the time, the only blockchain you could invest in was Bitcoin. And so all of the corporations around the world, all of the central banks around the world, all essentially talked about this blockchain thing, which drove people to Bitcoin. And then when we were ready for the market, you know, Bitcoin kind of drove the whole market. And all of the corporations and all of the people that were trying to get rid of Bitcoin ended up promoting and giving PR for Bitcoin. Yeah. And to me, it's got a network effect. And, you know, I think Trace Mayer says the hodlers of last resort effect, whereby this thing, I don't think it's going anywhere. And as long as we are, you know, keeping Bitcoin conservative and being ultra, you know, more speculative on alternative chains and alternative innovation, then I don't see where this is going. And the bear market to me is the ultimate opportunity to accumulate undervalued assets. And you don't want to be the person accumulating, you know, when you're at that peak cycle where all the podcasters are telling you in, when CNBC is telling you to get in, you know, at those peak cycles. Now, while that has worked for a lot of people, so I know a lot of people bought Bitcoin at 1,250 at the peak of the Mt. Gox manipulation, but a lot of them sold them at 250 rather than having the capital to actually make its way through. You got to be looking at this long term. You've got to be able to do this, and so, but I believe the ultimate is when you can accumulate in the bear, not sell in the bear, and then be ready for the bull. Because I you know, in my mind, we've got a lot more bulls coming through, and I fully expect my $100,000 Bitcoin to crash to $20,000 in the future.
Yeah, I think that's a great place to leave it, Simon. We could talk all day, but thank you so much for joining us. I will put all the links to follow your work in the description below, and thanks so much for coming on today.
Okay, all right. Well, thanks for creating content. I think it's one of the most important things out there. Our industry is very confusing, very hard to understand. So people like yourself that are creating content, are doing your part for the industry. So I really appreciate that.
Thanks for the kind words, Simon. Thanks, guys.